Hello. Hello. A very good afternoon to all of you. Thanks a lot for joining this session. Typically, the post-launch sessions are difficult to start with, but I hope people will join and trickle in as we speak. Thanks again for joining. So, from yeah, that's a good idea, Pracheta. So, may I request everyone sitting behind to move a bit forward so that at least this hall looks settled. Priya and my team at least can come forward. Yeah, thank you very much. So moving from the plenary sessions in the first half, now we're going to start the technical sessions. This is the first technical session for the day, and this is titled Channel Innovation for Individual Women Enterprise Credit, Digital Credit Delivery by CLFs, cluster level federations in the SHG ecosystem. As we all know, SHGs have emerged as the most important platform for financial inclusion, and I hope this is going to be a good interactive session to kickstart and moderate the session. May I invite Ms. Kalpana Ajayan, Regional Head and South Asia Women's World Banking. Give her a round of applause. And the panelists, Ms. Aloka Majumdar, Managing Director, Global Head of Philanthropy and Head of Sustainability India, HSBC. Mr. Satyaki Rastogi, Chief General Manager, Small Industries Development Bank of India, SIDBI. Before we start, I would request you have a QR code. You can always scan that and put your questions for the panelists as they speak. They will choose which questions to respond to. And now over to Kalpana. Thank you. Thank you very much.
Good afternoon, everyone. As he said, this is the tough one after lunch, right? But we in the panel are fairly determined to keep you all awake because I think this is a discussion that is what we believe is of critical importance right now. I want to start with showing a film that we've developed with SIDBI on what individual enterprise loan, the program called Prayas, which has been developed by SIDBI. What is it all about? We'll hear it from the beneficiaries. So if I may request you to play the film, please. The volume is missing.
Banks and financial institutions find it challenging to operationalize loans for women-owned nano-micro enterprises, largely due to constraints including limited formal documentation, negligible collateral, thin credit histories, a lack of products tailored to women's business realities and growth cycles. Women micro-entrepreneurs deeply value trust and transparency. When financial services are delivered through familiar, trusted channels, it simplifies onboarding, product adoption, and consistent engagement. The Prayas Individual Enterprise Scheme aimed to provide affordable, collateral-free loans for individual SHG women's businesses in a viable, scalable, and trusted manner. Leverage cluster-level federations, women-led institutions within the SRLM ecosystem as distribution partners. Was built on networks that already manage group credit and government grants. The model enabled credit delivery by the women for the women. The scale of the opportunity is significant. Based on NRLM data and Women's World Banking's research, there are approximately 2.95 crore SHG women anchored within model CLFs, of which an estimated 73.9 lakh are women entrepreneurs. Among them, 64%, that is 47.3 lakh, require individual loans in the 50,000 to 5 lakh rupee range. With an average ticket size of 1.15 lakh rupees, this represents a 65,800 crore rupees of lending opportunity. Across India, over 9,400 model CLFs already demonstrate the institutional maturity required to manage such partnerships. Each CLF can process 2 disbursing 2 to 3 crore rupees in credit and earning 3 to 4 lakh rupees in commission income, making the model commercially viable for both lenders and CLFs. For CLFs, the model also created sustainable incentives. Each CLF earned a 2% commission and 1% processing fee, averaging 3.5 lakh rupees in annual income. Between May 2024 and September 2025, the scheme was expanded to Maharashtra, Bihar, and Assam. 31 CLFs were onboarded as lending partner institutions. 2,942 loan applications were sourced, of which 1,567 were sanctioned, a 52% approval rate. A total of 1,433 loans were disbursed, amounting to 19.98 crore rupees. The average ticket size was of 1.39 lakh rupees. Operational efficiency was high, with nearly 80% of loans sanctioned within 2 weeks. Borrower quality and portfolio performance remained strong. 38% of borrowers were new to formal credit. Among those with a credit history, 62% had CIBIL scores above 750. Loans were primarily used for business expansion, 23% allocated for inventory purchases, 27% for improving or expanding shop fronts, 50% for adding new equipment, machinery, or product lines. 38% of borrowers expressed intent to seek larger loans up to 5 lakh rupees within a year, signaling clear graduation potential.
प्रयास लोन ने व्यवसाय को आगे बढ़ाने में उस पैसे से बहुत मदद मिला जिस टाइम मुझे रिक्वायर्ड था.
Prayas is not just a loan, it is a pathway for women entrepreneurs to grow and thrive.
Thank you. Mr. Satyaki was just saying that, the film is saying everything. Do we need to even have this panel? Huh? But I was just telling him that, there is so much of work and intent behind the program that I think will only possibly be surfaced, through these kind of conversations. And it's wonderful to have Mr. Satyaki from SIDBI and Aloka, old colleague and friend from HSBC, and an important provider of philanthropic capital especially for the work that we are doing currently as Women's World Banking with SIDBI. So we know that rural economy is to a large extent sustained by women entrepreneurs. And, they play such a significant role, in contributing to the rural economy. And when, I'm sure you saw the term by the women and for the women. And so when we have women in the CLF system actually participate and, being trained for, various things. And this is where I want to ask Mr. Satyaki first in terms of, it's working now. So in terms of, this particular program, now we've reached a certain momentum. And from where you sit, from SIDBI's perspective, this program now demonstrates that, women-led CLFs can not just originate, but they'll have been trained to appraise and service enterprise loans. And this has been on the back of very good portfolio performance and deep community trust, being such an important element. I know we saw some numbers in terms of the size and, opportunity. But really, how do you think Prayas strengthens, the business case for banks, institutional lenders to invest in women-centric distribution? Because this is not just loans for women. This is a women-centric distribution model as well. So how do you think, this goes towards that? And what are the key design principles, according to you, that make this model commercially viable and scalable? Because one of the things that we were talking before the panel was also, a lot of times it gets confused with CSR models and things like that. So what we are at pains to prove is a commercially successful and a scalable model. So would love to hear from you.
Thank you, Kalpana, and thanks to Access Development for inviting me for this chat. Let me first say that if I become too verbose, please stop me, because this is a program which is very close to my heart. I've been associated with it since beginning. Having said this, you said this program is for the women and by the women. I say of the women also. Right. So it's for for the women, of the women, and by the women. And this is why, where when we designed this program, the concept was that SHGs and the CLFs, they form very close communities. So they come from homogeneous groups. They come with a lot more domain knowledge about each other. So it's very easier for them to understand the behavior of the borrower. It is very easy for them to assess the needs of the borrower because they are more into that ecosystem. And this is what is the pillar of this. That's why we say by the women, because these are women who will assess their own community people, their own people whom they know, and for them, and they run this entire program. So the first thing is that they are able to assess it less on whatever risk-based perceptions that we as bankers have, but they have all that domain knowledge, may not be technically, they may not technically say that this is what the risk comes from, but they understand all those risks. Second is the entire structure of SRLM, NRLM is a very well thought of structure. So it has a system where entire structure, governance structure is in place. The only thing that I feel they still need more on capacity building, on technology, those sides, because that's something evolving. But that's where I think Women World Banking came into the picture here. And I must congratulate you and thank you for having done a tremendous job on this project for capacity building, especially training those people, making them understand. And if you remember initially when we started in Bihar, Jivika was like, what you people are going to do and we'll not do. They were quite skeptical about this project. Today, I think they are the biggest votaries of this. They are themselves going around saying SIDBI should do this much more, bring more money, do this, because demonstration, there's nothing better than demonstration. And when we have been invested in this project, you gave the numbers, I'll still at the cost of repeating, more than 2,000 loans sanctioned in this. So more than 2,000 loans sanctioned in this 1.5 year that we've started this program. Number of CLFs has gone up to over around 50. More than 22, 23 crore rupee funds have flown. The sweetest part is that out of this 23 crore, not even roughly around 2 lakh rupees, that's all. I think beyond that, there is no NPA. Not even, I will not say NPA, there's difficult to find cases which are in default, even for a day. So I don't think there are even SMAs which are high. So the idea was that we demonstrate that this is possible at scale and at a cost which is affordable for them. So the biggest problem they always had was finance was not available in time, and if available, not at the right price.
That's right.
Now, this program addresses all the three. One, as you showed, that 80% of the loans have been sanctioned within 2 weeks. And that 2 weeks also takes time because there's a process. It has to flow from the SHG to the VO to the CLF. So the manual process takes some time. Otherwise, loan sanction and disbursement doesn't take that much of time. So once all these three things are addressed, I think it's a model which now needs banks to come and look into and deliver and scale it.
Yeah, I know, and I think that's an important point you make in terms of the differentiator as well, which is that where you've used technology, the entire process being digital. When I go and meet these women in the community, they are astounded that they can actually receive a loan in their account in, forget about 2 weeks. I mean, even a couple of months, they are delighted. I mean, it's not an experience that these women specifically are used to. And so therefore, I think SIDBI's investment in technology, I think has also played a very important role. And in addition to, of course, making it completely affordable, as you very rightly said. Moving on to Aloka. we know that, like what he was talking about in terms of almost zero NPA, less than 2 lakhs, etc. We know that women are a good risk when it comes to lending. We know this not just from here, but from almost every geography around the world. And as HSBC, as a global organization, when, you have such a critical role to play, in the de-risking and incubating and the scaling of this whole women-centric credit delivery model. And I must thank you, Aloka, for being a partner. We brought the technical expertise, but, you've provided the patient capital to keep this project going at the ground level, and I must thank you. And so how can corporate foundations really, these kind of partnerships, what is the role of philanthropic capital, and, what we were discussing earlier. I think it'll be very interesting for also the audience to know about not just one kind of funding, and if you can please throw some light on that.
Yeah, no, absolutely. It was great to hear what you mentioned in terms of the scale that this program is reaching now. I mean, that's something that we've been battling, like all of us, when we talk about financial inclusion and spread, that's what we've been struggling now for many years. And this, I think, is a great example. I think, Kalpana, I'll just take a step back to say that, in our work globally, what we've seen that this is not a problem for India. When you talk about underfinancing of women entrepreneurs, this is a global problem. Yes. And across many markets, it's the same thing. And it's very interesting. The reasons also, to a large extent, there is a lot of similarity. One, you have a perception issue. It's like there's a systemic bias. You will see, everybody will talk about less creditworthiness, low risk-bearing capacity. Then they will say, decision-making in investments, etc. So one is that part, the perception piece, which is a very strong piece and largely common across markets we've seen that where we operate. The second piece is something which is to do with some proper systemic issues, like, your KYC, your documentation. While India have made actually major strides in addressing this with our, Aadhaar and others, but this seems to be another issue. And even asset ownership remains a challenge everywhere. If you go to Latin America, if you go to any other areas, even in Southeast Asia, we see similar kind of issues. And the third one is a little bit of a gender agnostic, which is lack of education, lack of financial literacy, etc. So I think we are dealing with so if you're talking about financial inclusion or the challenges around women entrepreneurs across the world, there are many commonalities that we find. Now, where do we come in, as in terms of, providing philanthropic capital? Now, what we believe is that there has to be a fair amount of de-risking. And therefore, the de-risking, and I was speaking with Mr. Rastogi before this to see that, who gives that de-risking money? Because, it's not possible for a commercial entity or even for SIDBI for that matter, for you to say that, that first push where some of the risks that a commercial organization cannot take, actually, it is the philanthropic capital that can take that risk. I think and that's something which we would call, philanthropy for systemic change. We talk about many words we use, catalytic, etc. But as one of the things that I do believe is that, and the point that you made, not everybody is aware of the kind of philanthropy capital that is available in the market. Today in India, if you speak with most of these organizations, they will talk about CSR money. I'm sure most of you who are in the thing, if you talk about, we are only thinking of CSR money. CSR money has its great advantages because, the amount is increasing year on year. So that's a huge advantage, right? You have that much capital available. But it also has certain constraints when it comes to, it is made with an objective of going project by project. But you have other philanthropies. You have foundations, you have grants, you have high net worth individuals. So you have various kinds of philanthropic capital which is available. And I think for us to make any change, any catalytic change or systemic change, for organizations, one will have to access these. Because just you're not de-risking yourself as an organization, as a non-profit, or when we're talking about any such program, it's only one kind of capital. There is a risk associated with it. So that's going to be very important. I'll just answer, just to give you a few examples of what we do in terms of, for example, we have actually worked on, say, first loss capital and credit guarantees. Great opportunity for for organizations to use grant capital for that. You also have patient capital for flexible repayment structures. So we have worked with, SEVA to create something called a livelihood recovery and resilience fund. And Mr. Rastogi didn't speak about it with you, but it's to create parametric insurance for women, nano and micro entrepreneurs facing impact by climate change. Now, the point is, this is a new concept, you're not going to have everything ready, your credit assessment, etc. These are things you will need to kind of work on, and your philanthropic capital comes in really handy when you want to do that. The second, I think, he spoke about is the capacity building. This is never going to go out of need, fashion, whatever you want to call it. I think all of us, we will have to be at it. It's never going to be less. It's going to be always relevant, and that's where I think philanthropic capital, and I would say it is largely systemic. Capacity building, because the way things are evolving, you're talking about technology, AI, etc. So therefore, that's going to be very important. And the last piece is that of, I think, what happens is if you take NGOs, social enterprises, fintechs, on the one hand, then you have the lenders and the borrowers. Now, philanthropic capital can come in to work with these NGOs, SSAs, and fintechs to actually solve the problem which is in between the lenders and the borrowers. And I think that's going to have the impact that it's going to have. And we also have to ensure one thing, that there will be failures. I think another thing that we don't take into account is that for any time we talk about philanthropy, we think that everything is going to go hunky-dory. It's not going to be that. So one will have to, also take the risk of failure, which is going to be important. But I think that's the beauty of philanthropic capital. So that's, I thought.
No, thank you. I really love the framing of, solutioning at a macro, meso, and a micro level. I think that's what you've explained with, your examples. I mean, and philanthropic capital can play a role at every level, end user, meso, where we are looking at institutions, and macro at the, at the ecosystem, systemic change kind of level as well. Now coming to you, in terms of, you spoke about Jivika, early on, and Jivika was one of those, I wouldn't say naysayers, but doubters when we started the journey, and and very quickly, we've scaled up there. What really what do you believe has resulted in this confidence in this program, so that it's almost like they've been co-opted, to deliver the solution at the ground level? What do you believe are the reasons?
So, I think, as I said, they were skeptical to begin with. But what has really turned their skepticism into optimism are 3-4 things. One is, I would say, that this program was totally designed according to their own structure. So this more on the community ownership. So once the community ownership takes place, the de-risking happens. The second part is the digital process. Now, when we take the digital process, the beauty of this program was, even if many places, most of your fintechs and the other digital lenders, they depend a lot on bureau score. The bureau score is not a part of this, underwriting process. And what we only depend upon is that the women who are taking loans under this program, they have undergone 2 cycles of loan within the SHG. So they are not alien to credit, but they were not a part of formal credit. So what we see, what you showed, that 38% were new to credit, I will say they were new to formal credit. But the idea is to assess it differently, not just depend on the bureau score, but depend upon their own culture, their own credit behavior, and their own credit behavior within that SHG is already existing, but we've not been able. So the second pillar formed that. The third one came through that we built in an incentive for the CLF also. Now that was very important, because these are the people who are going to be the distributor of loans as also the collector of loans. So unless and until there is some incentive for them to, there would be no intent on their part to actually take this program forward. So once they are getting, maybe it's a small amount, it appears to be a small amount, 3.5 lakh in a year, but it's a large amount for them. And they can do a lot more activities using that capital, whatever is going. And finally, this became the process. We thought this is scalable, and now we are seeing it is scalable. So these were the things that worked, and that's why Jivika, from being a skeptic, they became optimistic about it, and in fact, not optimistic, now they are very bullish about it. And they are asking for more. So I think that's something that's good.
Thank you. I think the product design, the delivery, the technology, all of this has, you're saying, reinforced the confidence, and ultimately, of course, is when the rubber meets the road, the credibility at the ground level. We can say 3 days and 4 days, but they have to see it at the ground level, and that's
One more thing I want to add is the structure that you have put in place.
Yeah.
That is also very important, because without that, again, we were not present in the field. In the field was your team.
Yeah.
And the commitment and the ground level feel of that team was very important to make this a success.
Yeah, I think that's such an important point you make, because to be nimble and agile, taking feedback and the team feeding it to you, and equally your partnership in ensuring that those changes were made in real time and you were implementing it. It was a good partnership. I think that is also equally critical. Thanks for thanks for being an excellent partner in driving this program at the ground level. Now, Aloka, another question for you. Sitting where you are as a global head, for all the philanthropic activities in HSBC, based on your experience, Aloka, what are some of the opportunities and concerns that you are seeing, either as an enabler or as a disruptor, when it comes to women and women's economic empowerment? Like, what are you seeing?
But I'll just be slightly impolite to just add one thing that both of you mentioned before this about Prayas. I think I spoke about philanthropic capital. I think also the Prayas partnership is a lot about how one can use CSR funding. And this I'm talking about pure CSR and not philanthropy, where you actually create a proof of concept, and therefore then it gets institutionalized by the government. I think that's something that we have to, the ability of CSR funding to be used to, demonstrate something as, because, certain things we will not be able to do with only these schemes. And given that we are in a country where there are multiple such schemes, and as you mentioned, the volumes are huge, right? So that's something that I thought I should call out. And the other thing is that whenever something is not working, documenting that is going to be very important, because when you're putting CSR money in something, enabling something, we are always saying that there is always going to be a risk of failure, but I think we always have to take that. I thought I'll just call it out.
That's such an important point. In fact, there was a team discussion just the last week of December. We said, we need to maintain error logs. It's a banking overhang, Aloka. Once a banker, always a banker. But, that is something that, absolutely agree. We must maintain the error logs to understand what is going wrong, with the program at any point in time. Completely agree.
Great. So coming to your other question in terms of what in the future, what we see as, enablers and disruptors or concerns as well, I would put technology and AI up there. Because I think globally what we see that this sector, even the inclusion sector, is going to see major changes when it comes to technology and AI. Now there are two things. It's actually an opportunity. And we've always seen that, the emergence of fintechs in India, I don't think any market has seen that huge number of fintechs have come in. But globally, what we also believe that this you're going to have a huge amount of technology and AI coming in. And I think it's an opportunity. Why? It's also going to address some of the concerns or the perceptions we spoke about. Your credit worthiness, your, risk-bearing capacity, everything. When you're talking about technology using AI and data, these are the things which are going to be relevant in terms of what's going to be an opportunity for the sector. I think the other thing that I was just thinking about that while uh, this has an opportunity, the banking sector is already seeing massive fraud threats. So therefore, I think as we build capacity of women entrepreneurs for them to defend themselves against, the unwarranted criticism, I would say, while technology and data will help them to defend and deflect some of that, at the same time, and I think this is to a large extent gender agnostic, but I think the threat of fraud is going to be equally important, because if you're selling these, because your cost is going to come down as once you start investing in technology, etc., there will be more access. But with more access, you have to build the capacity to ensure that they go through, because what we are facing today, the large Indian middle class, the amount of threats, the amount that the financial and the banking system is using to ensure that they keep us safe, you have to say the vulnerability of that audience is going to be far higher. So therefore, I think that's going to be one key piece that we have to do. And therefore, I think, when I entered this sector in 2004, financial literacy was the ask of the country. I think it's still going to be the ask, and that's going to continue. Yeah, so that's, I would say, in my mind, the two big things.
Yeah, I think it's so relevant. I mean, and I think this is coming up again and again, consumer education, awareness, protection. I think, Women's World Banking is also doing some work with the Reserve Bank, and we're picking this up very clearly from a sectoral point of view, the need to do that. I couldn't agree more. Thanks, Aloka. Closing question to you. In terms of what do you think is the untapped opportunity, in women's enterprise finance? And, we did speak a little bit about how the banking sector can replicate, but I know that you had some more ideas in terms of how to actually replicate and institutionalize these kind of models, to have these women-centric or women-centered portfolio. I know you had some interesting ideas before we actually got onto the stage. If you could please share some ideas.
Yeah, so I think this space is very big. If you look at just the NRLM structure, we have around 10 crore women as members of NRLM, SRLM structure. Out of these, at least 40% we can assume that they may be into the livelihood activities which are non-agricultural. So of this, even if we take a 10% space, we have roughly around 50 lakh women who need to be tapped, which is a big number. And if the average means, I'm talking about these 10% women who have a requirement of a larger loan than what is available to them through an SHG. So if they have this requirement, and let's assume 1.25 lakh or 1.5 lakh as an average loan size that they are taking, these 50 lakh women, the market size is 65,000 crore, which I think you also showed in that. So if this is a massive size, and scalability means it gives you opportunity to scale. Now, what is important in this is, while, as she said, that there is a lot of fraud angle, there are lots of other things that can happen. So you need to refine the models, you need to bring in refine the underwriting models, as well as build their capacities to keep their data safe, to always keep on training the women as to what kind of threats will come to them in terms of fraud, because once the money starts coming in, they will have money in their account, and so everything needs to be addressed. And another challenge would be in this scaling is how to build a structure, a delivery structure. The delivery structure still, I feel, will be much more possible for banks, public sector banks, especially because they have a bigger network. Whereas for private sector banks or other DFIs, the networks are smaller, but public sector banks are already present in those spaces. So how those structures are created and how the delivery is done, that's going to be the biggest challenge going forward.
Also, I think what you were also mentioning earlier in terms of actually having a facility, you spoke about that, where philanthropic funding can be pooled together. I think that was a very important point you made as well.
So that is also very important. So where we need to create these structures and also pool in the philanthropic capital which is available from various sources, because while philanthropic capital is there, I think it's a scarce commodity. Right. So we need to pull in from various sources and see how best we can utilize it for the benefit of taking credit to women across the country.
No, thank you. Thank you so much for the wonderful, frank conversation. And it's always a pleasure talking to the two of you. And thank you for being here after lunch and listening in to what we believe has been one of the key experiments where we've had women-centric distribution model. There aren't too many. While women-centered distribution model exists for things like savings, credit, it's been a fairly rare kind of a proposition. And so we take pride in the fact that we've partnered with institutions like SIDBI and HSBC to actually pilot and scale. It's now in 3 states, going to the 4th state, and a 5th state waiting to kind of start off. So it's actually very exciting to see the enthusiasm from the state rural livelihood mission community to take it to scale. And as responsible lenders, the 3 bankers on the stage, it's also very equally important to ensure that the portfolio performs well as well. And that has been actually very gratifying for us, that the portfolio has also been, performing very well. So here's to, that 50 lakh opportunity that you were talking about, Mr. Satyaki. And, here's to the opportunity that we believe is like waiting to be tapped through innovative financing, through innovative distribution models, and through innovative partnerships. So thank you so much for being here. Thank you.
Thanks a lot, Kalpana, for the depth moderating. Thanks, everyone, for the good audience that you have been. Thank you. We'll move to the next session.